Welcome to the Capital News. I'm your host, Alex Kreitis. Today is May 5th, 2021. Thank you so much for joining me. The title of today's podcast is Social Unrest Contagious? I think it is. I want to take the time today to go through a few articles to provide a couple of updates to some topics that we have been discussing here over the past few weeks, if not past few months. I'd like to do this from time to time, read some articles either in their entirety, depending on how well written they are or how in-depth they go, or we might just skim over a couple of them, and that is what we're going to do today. So an update to some of the conflict that is gaining a little bit of momentum, unfortunately, with respect to Israel and Syria. Hopefully that starts to de-escalate, but there was another attack that occurred this week. There have been protests down in Colombia that have been taking place for the past week, and with everything else that's been going on, it's just slipped off the radar, and something that I've wanted to discuss but just haven't had the time to do so. So we're going to read an article out of CNN on an update on those Colombian protests. But before we get into that, I just want to mention to the audience that my podcast, I don't know where everybody's listening to them, but you can always find them on thecapitalnews.com. And the reason I'm mentioning this is because there's been a little bit of a delay with the uploading of my videos to YouTube. So basically what I do is I upload it to my website, and then I have a certain system that just will circulate the podcast to various other sites, whether that's YouTube or Facebook or LinkedIn, what have you. That way I only have to do it once, and then it goes all over the place. So it's very convenient for me. But I've noticed over the past couple of days there's been a slight delay as to when it gets uploaded, at least to YouTube. So if you can't find it on YouTube, you can always find it on thecapitalnews.com. Okay, so I just wanted to mention that to the audience if you're looking for them. Now, obviously, sometimes I'll take a day off, but for the most part, we do these every day, Monday through Friday, and you can always find it on thecapitalnews.com. So is social unrest contagious? I believe that it is. This has been an argument that I've been making for the past couple of years, prior to COVID-19, prior to the restrictions, prior to the lockdowns, which I have to stress because it is vitally important that the audience remembers that the global economy was weakening and turning south throughout 2019. We saw protest after protest after protest all around the planet calm down in 2020 because of the pandemic, and they are picking up steam once again through 2021. And quite honestly, they should, because nothing was solved during 2020. If you want to contend, as I do, that we are in the midst of a global debt crisis, a global debt problem, well, our fearless leaders globally think that the solution is to add even more debt to the pile. Okay? And everything that one government and one central bank after the next is doing is inflationary by definition, especially the major economies, the major central banks. It is inflationary. An increase to the money supply is by definition inflation. The effects of that inflation are higher prices. Too many dollars chasing too few goods. It's exactly what's taking place here in the United States, and it's happening globally as well. We have people in this country who are being incentivized not to work because they're getting paid more to stay home, the same to stay home, even less, but they make those trade-offs. I can stay home, might be making a little bit less, but I don't have to contend with this, that, or the other, so I'm just going to stay here. Smaller businesses can't find help right now because they can't compete with Uncle Sam. This is what every economic student is taught in Econ 101. The government crowds out private sector investment in private sector activity. When the government gets involved, it's the government. Which is quite ironic because you have a lot of leftists, a lot of liberals, a lot of Democrats who are always anti-monopoly. But for some reason, they're perfectly fine with the government being one entity, one major powerful entity, just running everything. And there's a huge difference. I'm not advocating for monopoly, but here's the big difference between a large corporation versus the federal government. No matter how large and powerful that corporation may be, they can't throw you in prison. They can't compel you to do something that you do not want to do. And if you don't do it, they can fine you or tax you or, again, throw you in jail. But the government can. The government is an institution of force. So anytime you get into a discussion, a friendly debate, with a friend, with a stranger who happens to be of that political persuasion, who is all against anti-monopoly, who is all for anti-monopoly, but is also for big government, just sort of connect those dots for them. As simply as I just did. What did it take? 10 seconds? Just, have you ever thought about what you're actually saying here? I mean, not that I'm picking on, let's just say Walmart, as big as a corporation as they are, very well known, as big as they are, Walmart cannot compel you to walk into their stores. But the government can compel you to do things, or they're going to fine you, or they're going to tax you, or they're going to lock you up and throw away the key. That is a huge difference. And that needs to be understood. That's a little bit of a side rant, but again, just something to be mindful of. Because the left in this country, most definitely now, since they are the political party in power, in charge of the White House, in charge of the Senate, by a razor-thin majority, obviously Kamala Harris, or hyena vice president, is the tie-breaking vote in the event of a 50-50 split. And, of course, Nancy Pelosi still rules the roost in the House of Representatives. Well, they're just rolling up their sleeves, chomping at the bit, to spend as much money as they possibly can. They're not done. They're going to get away with as much as they possibly can before the midterm elections, which is going, it already feels like an eternity away. And of course, the Republicans will pretend that they are now these righteous warriors, these fiscally responsible conservatives. Well, they weren't fiscally responsible when they were in power. So don't fall for these games, because it's these types of political tricks in word games and the hope by these political parties that you'll just come back to the party. You'll just come home. You'll come home to Team Red, to Team Republican. You'll come home to Team Blue, Team Democrat. Don't fall for this stuff anymore, because this is what's leading to all of this social unrest. Again, it's that intersection between economics, politics, and social issues. I think all of it is rooted in the economic issues. Because if you were to have a truly strong, vibrant economy, you wouldn't have a lot of the political fallout. You wouldn't have a lot of the social issues that we're contending with, because a lot of people would say this is a bunch of nonsense. We're not even going to be paying any attention to it. Why? Because we're being so productive. The economy is so healthy. Everything is so vibrant. There's opportunities galore. That what this nut is saying is outrageous. That person isn't going to have a platform. But because everything is so weak, and people are so frustrated and depressed and anxious, etc., etc., these things find an environment in which they can survive, and some of them can thrive. It starts to stir the pot. It becomes a vicious cycle. And that's why social unrest is contagious, because in some parts, certain movements can become emblematic. They can become historical. They can become inspirational to other people around the world. Regardless of what may be discussed here in our mainstream media, a lot of these topics, a lot of these stories can be found if you do simple Google searches. If you want to look for them, they are there by many outlets, even a lot of mainstream outlets, but you have to go read them. This is not what's being talked about nightly or even daily on a lot of these stations. They might give a little bit of a tidbit here or there, but these are the stories of the day, not what they really focus on 24/7 and the crap that they make up just to divide this nation, because that's what they're really all about. But some of these movements can prove to be historical and inspirational, and that's where they become contagious. Furthermore, with the proliferation and the popularity of social media outlets, well, now there's another avenue for these people, especially young people, because it's young people who are leading most of these protests and riots and movements. Well, they're going to share this information. They're going to live stream what's actually taking place on the streets. And what might be taking place in Colombia could inspire somebody in France or Belgium or Germany or Hong Kong or Australia or Peru or Canada or Russia or the United States of America. And it starts to snowball and it starts to gain momentum. So we're going to get to those articles shortly. I want to get to market performance. And as yesterday we stated that our Treasury Secretary, Janet Dingbat Yellen, came out and made a statement that was partially taken out of context, but nonetheless, she did say that she was anticipating or could see higher interest rates in the future. And of course, that's what the markets picked up on. Now, as I stated yesterday, Janet Yellen had a problem when anybody within the Trump administration would comment on monetary policy and where interest rates should be. Well, she is now a part of the Biden administration, but apparently she still thinks that she is in the Federal Reserve, or she thinks because she was the chair of the Federal Reserve that she can opine on where interest rates can or should be or will be in the future. Again, it's just these people talk out of both sides of their mouth. Okay, she should not be there. She should be at home, taking a nap, retired, keeping her mouth shut. But that's not going to happen. She's there, and we're going to continue to see a lot of 1-2 punches, a lot of double whammies coming from her at the Treasury Department and Jay Powell at the Federal Reserve. And don't forget, Janet Yellen gave away $650 billion. $650 billion. That's our money. That's taxpayer money to bail out poorer and middle income countries. She gave it to the IMF. I remember we went through and read some of that article and blah, 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 blah. The IMF is going to have their board meeting or whatever, their committee meeting, and we're going to have to decide as to whether or not we want to receive this $650 billion. What a joke. What a joke. Somebody's going to offer you $650 billion. You're going to take it. So what a joke. And of course, that's what happens. And Janet Yellen didn't have to seek approval from Congress. She just said, yeah, you want it? Here it is. But don't worry, ladies and gentlemen. Don't worry, American taxpayer. Yes, it's your money, but it's going to be a wash at the end of the day. Yes, we're going to have to go out and borrow more money to fill the coffers again. But don't worry about it because those other countries are going to pay interest on that money. We're going to get it, and that interest payments will pay the interest payments that we have to make to whoever buys our debt. Who buys our debt? The Federal Reserve. Why? Because nobody else wants it, because it's junk. That's why. That's the system we have here. And off of that news, with those higher interest rate comments, the markets sold off. And today, it was a little bit of a choppier session, but the reversal, the damage control, was most definitely in place. So it was interesting to see the Treasury Department and the White House both doing a little bit of damage control on that. And what that signifies to us, and it's no surprise to the Capital News or the Capital News audience, is how fragile the system is. We cannot tolerate increasing interest rates. We can't even tolerate talking about them, let alone it actually happening. We witnessed what actually happens when they actually do increased interest rates 25 basis points at a time. That's nothing, ladies and gentlemen. That's 0.25%. That's nothing. Okay? That's what they did through 2018. All right? And by the time we got to the fourth quarter of 2018, see you later, stock market. Economy couldn't tolerate it. Stock market couldn't tolerate it. That was a shot across the bow. Economic historians are going to say that was an inflection point. That was a turning point to this asinine, criminal economic policy of quantitative easing. If you can't increase interest rates and reduce the size of the Federal Reserve's balance sheet in an economy that is near full employment and is still trending where GDP had been trending for the past several years, if you can't do it then, when are you going to be able to do it? And since then, we've doubled the size of the Federal Reserve's balance sheet. We have lowered interest rates back to the zero bound where they currently are and where they will likely stay for the foreseeable future. We can't tolerate increased interest rates. We cannot tolerate a roll-off of the Federal Reserve's balance sheet. What is normalcy? If they say, well, we're going to taper, we're going to try to get the Federal Reserve's balance sheet back to normal. What's normal? Back to what point? Because prior to the great financial crisis, the size of the Fed's balance sheet was just shy of $900 billion. Is that normal? Because from their inception in 1913, 1914 to 2009, $900 billion. Is that normal? Or is normal the $8 trillion where it is now, or just about? Or is it $4 trillion where it was, where it leveled off for the past several years prior to this pandemic and the doubling of the balance sheet? What's normal? Where's it going to be? Where are interest rates? What's normal for interest rates? The Fed coming out and saying that they have tools to fight inflation. The only tools that they have to quote unquote fight inflation is increasing interest rates, and they know what happens if they do that. They know what happens if it's just uttered that interest rates are going higher, as we witnessed yesterday. Now, again, that's part of the noise, and I don't want to get hung up on that stuff, but you get what I'm saying. We cannot tolerate. We've been discussing housing prices, the price of lumber, adding $24,000 in costs to the average new home build. $24,000. That was back in February. We just got the update that it's now $36,000 over the course of a few months. The price of lumber has doubled since then, since February, to where we are today, just about. Okay? Where are we going to be in June, July, August, September, the end of the third quarter? Might we see another increase of 50%? Because we went from, again, 24,000 to 36,000. 12,000 is 50% of 24,000. 12 plus 24, 36,000. There you have it. What happens if we see another increase of 50%? We're going to be at $54,000. Who's going to be able to afford these homes? I don't know the exact number, but I think if we should get to 54,000, I think that would be what my parents paid for their home 30 years ago, thereabouts, in a nice neighborhood, a nice house. That's just what people are now going to have to pay for lumber to build a house. How are they going to be able to do it? They're not going to be able to do it. And what happens if interest rates should go up? What happens if that happens? Who's going to take out a mortgage? Who's going to go out and buy houses? Who's going to go out and buy anything? Because your payments are going to balloon just because of that small increase in interest rates. You're not going to be able to tolerate it. People are struggling now, even though you have record low interest rates, because what's that doing? That's jacking up prices. There is no free lunch, ladies and gentlemen. That's why we're seeing these Google search trends of people asking, when is the housing market going to crash? Because people know that this is ridiculous. But there's no end in sight right now. I think this thing can continue going higher because there's demand for this real estate, but there's low supply. So you have the supply-demand dynamics at play, and you also have the inflationary pressures at play, and the Federal Reserve continuing to prime the press, throw $120 billion per month into the system at minimum, purchasing U.S. Treasuries and mortgage-backed securities. Why purchase mortgage-backed securities when you have real estate at all-time highs is beyond me. Jay Powell was finally asked that question. That's a tough question. It's a basic question. It's a commonsensical question, just connecting two simple dots here, but he couldn't answer it. He couldn't answer it. These people are trapped. These people are a joke, and these people are in control. And this is why you have one protest, one riot, one movement after the next. Yes, it's going to be something that breaks it. It's going to be that proverbial straw that breaks the camel's back, but it's all of these things together. And I think we're going to find ourselves in a stagflationary environment if we're not already in one. And a lot of people don't think that inflation is possible until you get higher wages. And I say that that is simply not true. And the reason I say that is because that has been disproven. Back in the 1970s, you had high unemployment and you had high inflation. Keynesian economists out there, they didn't think that was a possibility. But it is a possibility, and it can most definitely happen. And again, I think we're in the midst of it right now. And we'll continue to be in the midst of a stagflationary environment for quite a while. And if things get worse, depending on where you are, it could turn into a hyperinflationary environment. Because should we end up in an environment with higher interest rates, and again, they don't have to be that much higher to prick this bubble. That's how fragile everything is. That's how distorted the markets are, okay? You're talking about these zombie corporations. About 25% of all U.S. companies, small, mid, and large, are classified as zombies. What happens if those interest rates go up and their borrowing costs go up? They're already struggling as it is. That's what qualifies them to be called zombies, well, they're not going to be able to do it with higher rates. So you see where I'm going with this? That's a lot of people. That's a lot of jobs. And if you had market forces come in, which would translate into higher interest rates, you're going to see one bubble bursting after the next. And you're going to have massive amounts of people unemployed because of this. Now, you can get into the argument that that's going to cause some downward pressure on certain prices, and I'll agree with that to an extent, because you're going to have a demand fall off. So we are going to find ourselves in a very interesting situation. But I think when it comes down net on those goods and services that people actually need, and I stress that, actually need to live, your commodities, your food, your utilities, your power, those types of things are going to continue to go upward. Because you're going to continue to see, in my estimation, continued riots and protests. That is going to cause massive shortages. Okay, so you're just going to have continued price pressure moving up, and you're going to continue to see central banks continue to throw as much liquidity in the system as possible, because that's all they can do. They're a one-trick pony. That's all they can do. And governments, especially larger governments, as we have been witnessing over the past year, are going to panic as well, and they're going to continue to say, well, we got to do this, we got to do that, we got to give these people money, we got to borrow, we got to spend, we got to print, we got to beg, got to give it to them. They're not going to stop that, because that's all they know as well, because leadership, responsibility, and accountability are not an option with these people. Okay, so be on the lookout for stagflation, a stagnant economy, which we're most definitely in as far as I'm concerned. You got base effects, you got trillions of dollars out of nowhere flooding the system. Yeah, I'll show you a good time too with a bunch of funny money. Doesn't mean it's real. You still got to pay the piper, and it's going to be extremely expensive when the bill comes due. All right, here's some market performance. We have the Brazilian Central Bank hiking interest rates to 3.5%. Brazil Central Bank on Wednesday announced its second interest rate hike in 2021, a 75 basis point increase to 3.5%, and anticipated a similar rise in June to control what? Inflation. Although we are told that inflation doesn't exist. But we're starting to see some other countries admitting that it exists, and they're actually taking some policy stance to combat it. And Brazil is not a country to sneeze at. It's a big country, and we have to pay attention to what's going on down there as well, because if inflation should get out of control, you're going to see some riots and chaos down there. Make no mistake about it. Overnight Forex markets, we have the dollar index at 91.27, 91.27. Bitcoin is at $57,000 per coin. Not too much movement overnight in the Forex space. Overnight futures markets, we have the Dow Jones and the S&P 500 in the green, up about 0.1%, as is the case for the NASDAQ 100. Japanese cash trade putting on a solid gain of 1.76%. A sea of green across the board, across the pond in Europe. We mentioned yesterday that the DAX, the German exchange, was below 15,000. It recovered that and then some, putting on a gain of 2.1%. Putting on 314 points to trade at about 15,200 points, again, on the German exchange. Cash trade in Australia, sell-off of about 0.5%. Chinese stocks up 0.1%. On the commodity front, we have WTI $65.76 a barrel. Brent $69.17 a barrel, so continuing to flirt with that 70 handle. I imagine it will penetrate that 70 handle and bust through it to the upside. There is going to be some demand coming back to life as people venture out of their homes in the spring and summer months. Plus, there are still some supply issues that are contending with. Gasoline, $2.15, so be on the lookout for higher gas prices as we make our way through the summer months. Gold and silver were relatively choppy and flat today. Both, however, are in the green overnight. Gold, $1,791 an ounce. I would really like to see gold bust through 1,800 and hold there for a while, because then I think we're going to be off to the races. Silver, $26.62. I'd like to see silver bust through 27, really bust through 28, because I think if we get above 28 and hang on there, consolidate, there's a lot of white space up above. And I think both of these precious metals are looking for a breakout to the upside. Of course, that'll make me happy, but we'll see what happens. Copper putting on a gain of about 0.5% overnight. Copper, $4.56 per pound. Lumber, $1,634 per 1,000 linear board feet. The hits just keep on coming. So pay attention to that. People are being priced out of housing. And to round it out, Uncle Sam's U.S. 10-year junk note, 1.57%. So it continues to be range-bound in that area. Out of CNN, Colombia's bloody protests could be a warning to the region. Could be a warning to the region. So perhaps even CNN thinks that social unrest can be contagious. Tensions have hardly dissipated in Colombia after President Ivan Duque withdrew a controversial fiscal reform proposal this weekend. Tax hikes, basically, ladies and gentlemen. More than a week of violent protests have seen at least 24 people killed, and the demonstrations have evolved into a broader popular show of anger. Thousands of people are still taking to the streets to protest against police brutality and the economic cost of the pandemic and Colombia's extreme inequality. And with both issues common across South America and exacerbated by the pandemic, many international observers are watching Colombia's cycle of protests closely for signs of deeper regional effects. An economic cautionary tale. Duque was the first president in the region to launch a tax overhaul to help his country's pandemic-ravaged economy get back in shape. But rigid opposition from Colombia's workers' unions and social movements is a cautionary tale for any other president who plans to follow a similar route. While both the European Union and the United States have pursued enormous investment plans to rebuild their economies post-pandemic, many countries like Colombia, where the economy is dependent on exports and already burdened by a ballooning foreign debt, do not have the capacity to undertake a similar expansion plan. Of course, I take issue with what the European Union and the United States are doing. We don't have the means to do so either. That's why we're running $4.5 trillion deficits. You do not run $4.5 trillion deficits if you have the means to do something. You don't have the means to do something. That's why you run these multi-trillion-dollar deficits. But nonetheless, this is out of CNN. What do you expect? Such countries need to increase revenues through taxes in order to be able to spend and even to maintain vital social programs like cash support for the unemployed and credit lines to businesses struggling with the pandemic, a point that we have been making here for months. These countries derive their economic benefits from exports. You have these supply chain disruptions. You've had a major hit to demand on many commodities, many goods, many services. This just stifles, this just kills tax revenue for these countries and for many people in these countries, especially those lower income individuals. That's their lifeline. These social programs from their governments are their lifelines. Without them, they are suffering, and that's what we are witnessing one country after the next. Before he withdrew his tax reform plan, the president stressed it was of pivotal importance for the state to increase its fiscal revenues. The reform is not a whim, it's a necessity to keep the social programs going, end quote, according to the president. And he's right about that. He understands, politically speaking, what that means if you cannot maintain the status quo, what people have grown accustomed to. But critics argued the tax hikes, like a proposed VAT tax, a VAT, a value-added tax, increase on everyday goods, would disproportionately impact middle and working classes and escalate inequality even more. The article continues, and it goes down into human rights concerns, some of the police brutality that is being witnessed. And again, that could go viral. We saw what happened with George Floyd. We saw what happened to other protests globally in 2019. Things go viral on social media. Police are becoming quite belligerent with how they are handling some of these protests, and that in and of itself can feed protests globally. And the article continues to go into some of that fallout. So it's nice to see that CNN understands that intersection of economics, politics, and social issues. This is just picking up steam, and when it comes to the political fallout, they're talking about some of this contagion. whether that goes over into Peru, whether that goes into Chile, and so many other countries that were protesting in 2019. And don't forget the carnage that continues to play itself out in Venezuela. Okay, moving on to an article out of Al Jazeera. Syria intercepts Israel attacks near Latakia by the Mediterranean. Excuse my pronunciation if that's incorrect. Syrian air defenses have intercepted an Israeli attack on several areas in northwestern Syria, including the port city of Latakia along the Mediterranean coast. The Israeli dawn attack on Wednesday also hit the town of Haifa, east of Latakia, and Masayaf in Hama province. Earlier state media had reported explosions near Latakia, which were heard by residents across the city and outskirts. The Israeli military did not immediately comment. Israel rarely acknowledges individual raids and attacks. Syria gave no details on casualties, but said a civilian plastics factory was hit in the Latakia city. Israel has escalated in recent months a so-called quote-unquote shadow war against Iranian-linked targets inside of Syria, according to Western intelligence sources, who say the raids are mainly aimed at research centers for weapons development and military convoys moving missiles from Lebanon to Syria. And don't forget the economic and political strife that is occurring in Lebanon, and things are getting worse there, unfortunately not better. According to the UK-based Syrian Observatory for Human Rights, the Israeli attacks in Syria have already killed dozens of government and allied fighters in recent months. An attack by Israeli forces on several areas in Syria in January left 10 Syrian soldiers and at least 47 allied fighters dead. Iran's proxy militias, led by Lebanon's Hezbollah, now hold sway over vast areas in eastern, southern, and northwestern Syria, as well as several suburbs around Damascus. They also control Lebanese-Syrian border areas. Israel has said its goal is to end Tehran's military presence in Syria, which Western intelligence sources say has expanded in recent years. So unfortunately, that escalation seems to be coming to a simmer. Hopefully it does not come to a boil, but it very well could. And don't forget, there is still a lot of political uncertainty that is taking place in Israel as well. So there are a lot of balls up in the air that are being juggled right now. And lastly, we have out of the New York Times, federal judge strikes down moratorium on evicting renters. So the hits just keep on coming. This is something that it just proves to be timely, which happens to be the case from time to time here at the Capitol News with what we're discussing, and something else breaks as a result. So we have a federal judge on Wednesday struck down the nationwide moratorium on evictions imposed by the Trump administration last year and extended by President Biden until June 30th, a ruling that could affect tenants struggling to pay rent during the pandemic. The decision by Judge Dabney Frederick of the U.S. District Court for the District of Columbia is the most significant federal ruling on the moratorium yet and follows 3 similar federal court decisions. The Justice Department immediately appealed and will seek an emergency stay of the decision, potentially delaying a final resolution of the case past the moratorium's planned June 30th expiration. It remains unclear how wide an impact the decision will have on renters. It does not necessarily bind state housing court judges who rule on eviction orders, and 2 other federal courts have upheld the moratorium, adding to the confusion about its fate. So that's really the point of the matter here. It's not so much whether this thing is constitutional, unconstitutional, whether a federal judge thinks it should be upheld or struck down. It is about the confusion that is generated when the government gets involved. These are issues that have yet to be fully dealt with. And you are not going to have any type of miraculous V-shaped economic recovery when you still have all of these things yet to play out. Just not going to happen. You're just not going to be able to see any type of rapid increase in this economy. Furthermore, it's mathematically impossible because this is not productivity. People aren't working. They are incentivized to stay home. If you have a vibrant economy, you have productivity increases. You have capital formation. You have investment. You have increases to productivity, which leads to lower prices. We are concerned about inflation. You don't have these types of problems when you have a strong economy. You don't have a quote-unquote overheating economy when things are good. Because when things are good, those gains feed on themselves. innovation can feed on itself. Productivity can become more productive, meaning prices can come down. Supply increases. You can start exporting your surplus. You now start running budget surpluses as opposed to budget deficits. Trade surpluses as opposed to trade deficits. It's completely backwards how we run the show here. And it's just a game of musical chairs. It's smoke and mirrors. It's a clown show. It's a foundation built upon sand. They know it. And they know they're running out of runway. But all they can continue to do, because leadership, accountability, and responsibility is not on the table, they will continue with this nonsensical clown show narrative about base effects. Inflation isn't a problem. If it is, we'll just do this, that, the other. You don't got to worry about it. We can spend all this money. No problems. Bunch of nonsense. And we're all going to pay the price for it. This is not a gift from the government. Free was never so expensive. Check out that podcast and tattoo that to your forehead, because people think that a free lunch exists. It doesn't. And what we're going to end up witnessing, and we're already seeing it now, is one protest after the next. So the question is, social unrest contagious? Yes, I believe it is. Stay diversified, stay vigilant, and stay with the Capital News. I'm Alex Koritis. Godspeed.